Hey everyone, happy Thursday, August 22nd. It's about 10:40 in the morning on the West Coast, and it's time for another market update. Still trying to get used to new technology, but I figured out a way to at least show my smiling face for a second. But not a lot going on in the markets this week. Next week, on next Friday, we got a big inflation report, but there was some data that affected us, so let's take a quick look at everything. Earlier today, we got July's existing home sales. That broke a 4-month losing streak. It was up 1.3%. But the thing I want to talk about that I've seen on a couple different articles in the main housing media, let's say CNBC and stuff, is about inventories jumped 20% year over year. That's true. Inventory is up 20% year over year, but just keep in mind, we're coming up from such a small number in that year and the year prior with everything going on. If I did something one time last year and I did it 4 times this year, it's up 300%. So, inventory was really low last year, so it's definitely up, which is a good thing. That's led to, more deals and things like that. But just keep in mind when you see that kind of number, it's not, the market's flooded with inventory. We're still quite a bit, I think 40-ish% below what it was pre-pandemic levels, normal times. If you guys can remember that time. Job revisions. So this came out as it's basically revisions to those big BLS jobs reports we get every month that have such a big effect on the markets over the last couple of years and always. Where we get unemployment from and so forth. So this was from March of 2023 through April of this year, 2024, and it was down. I believe they made negative 818,000 revisions, down about 68,000 per month. It was down 0.5% over the overall job gains, which is the biggest revisions I think since 2009. So it just goes back to what we talked about. Those BLS job numbers when they come out are always really high. The markets freak out. The job market's so strong, but then they do these revisions. They do their own revisions, and then they do this bigger revision at the year end, and we see that job market wasn't nearly as strong as we thought throughout that time. The only reason this isn't a bigger deal and making a bigger effect on rates is that this is dated. This is ended in April, so we're at this point we're almost 4 months, almost 5 months now behind this data. So good overall for mortgage rates. It shows the Fed, hey, the job market wasn't as strong, but just again gives us an idea that those BLS job reports we should be a little skeptical of when those numbers come out. Next thing, so we got the Fed minutes yesterday for their last meeting, where they make their rate decisions, and nothing really big came out of that. It's all what we kind of knew, that we're all in line for a cut in September. A couple, some of the members wanted to cut at the last meeting, so overall didn't the markets didn't react too much. It's dated information. A lot's happened since they had that meeting. And then the other thing this week is, the Jackson Hole Symposium is going on in Jackson Hole, Wyoming. It's where all our our central bankers, big central bankers from around all these different banks around the world come. They get wine and dine. They talk policy. The main event really will be tomorrow morning. Our Fed Chair Powell will give a speech, and that's when, just like when he gives a speech after their Fed rate announcements, we just got to kind of listen to that and see what he says. Hope he strikes a dovish tone and says nice things and make us all feel great about rate cuts in September, maybe more rate cuts, maybe a half a point rate cut, things like that. That's what we'll be looking for. And so that'll be important because he could obviously, rile the markets with some comments. Next thing we got, initial jobless claims came in as estimated, 232,000. Continuing claims still up around 1.9. Again, don't want anybody to lose their job, but the higher these are, the more it's evidence to the Fed, like, hey, our labor market's not that strong, and better chance we're going to get a rate cut. So keep an eye on that stuff. But again, don't want anybody to lose their jobs. Average 30-year conventional rate, according to Mortgage News Daily, for high-end borrowers, dropped from last week at 6.58 down to 6.48. Good to see it below 6.5. And I think we're about 1.02%. I think it was 7.5% last year at this date. So nice to see we've dropped that much. Still more room to go. So that's good to see, though, head in the right direction. Next thing, so important dates upcoming. Like I said, not a lot this week, but next week on Friday, we're going to get the newest report for PCE inflation. So the core number is what the Fed's going to take the closest look at, but that's their favorite form of inflation to look at, PCE compared to CPI. So that's going to be an important one. We want to see inflation coming down or at least staying where it's at. Any surprises on being hotter than expected would not be good for our hopes of getting a half a point rate cut in September. And the week after that, we're going to get BLS jobs report, like we talked about. That's always been a big one. Let's hope it's accurate and not all these negative revisions, but more than likely it won't be accurate based on what we've seen. Week after that, we get CPI, the other form of inflation to take a look at. So the Fed will have all that kind of stuff before and more besides what I'm showing here when they have their next meeting on September 18th. Right now, the markets are pricing in a 100% chance of some sort of rate cut, whether a quarter point or a half point. We want a half point. Half point would be better for mortgage rates, obviously. But right now, the odds are it would be the quarter point. But if we get weak labor data, if we get cool inflation data and things like that between now and September 18th, there's a better chance we're going to get those lower rates. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope everybody has a great week. Thanks, guys.